Welcome back to the Daily Crypto Roundup. Bitcoin is back above $78,000. ARK Invest is now talking about a $16 trillion Bitcoin market cap by 2030. South Korea's Bithumb has just scored a major legal win, and Michael Saylor's strategy is holding its preferred stock dividend at 11.5%, while its main stock finally posts its first monthly gain in 9 months. So today is one of those days where the market is not just moving because of a single price candle. It is moving because the same story keeps appearing from different angles. Bitcoin is becoming more institutional. Crypto regulation is becoming more serious, and the companies built around Bitcoin are starting to look more like financial infrastructure than just speculative market plays. And before we get into the main stories, today's episode is brought to you by Kraken. If you are buying Bitcoin, Ethereum, Solana, XRP, or just watching this market and waiting for the next major move, Kraken is one of the most trusted names in crypto. You can use the Kraken link in the description to sign up, support the show, and get yourself set up on a serious crypto platform. As always, only invest what you can afford to lose. Do your own research, and never chase a candle just because the market is green for one day. But if you are taking crypto seriously, Kraken is one of the platforms worth having on your radar. Now let's start with Bitcoin, because the $78,000 level matters more than it might look at first. On paper, a move from $76,000 to $78,000 is not a huge percentage move. But psychologically, it changes the tone. Bitcoin had been stuck in that mid to high $70,000 range, with traders repeatedly watching resistance around $78,500, and then the bigger $80,000 level above it. When Bitcoin gets back above $78,000, it tells the market that buyers are still defending the range, ETF flows are still relevant, and the broader bullish structure has not broken down yet. It does not guarantee $80,000, but it keeps $80,000 alive. The reason this matters is because Bitcoin is no longer just being watched by retail traders on exchanges. It is being watched by ETF desks, corporate treasury teams, hedge funds, family offices, and major asset managers. That brings us perfectly into the second story, because ARK Invest has now laid out one of the biggest Bitcoin projections in the market, a $16 trillion Bitcoin market cap by 2030. According to reporting on ARK's Outlook, the firm believes Bitcoin could grow from roughly a $1.5 trillion asset today into a $16 trillion asset by the end of the decade, driven by institutional demand, spot Bitcoin ETFs, corporate treasury allocations, and the idea that Bitcoin continues to take market share from gold as a digital store of value. Now let's put that into plain English. A $16 trillion Bitcoin market cap would imply a Bitcoin price somewhere in the region of $760,000 per coin if you divide that market cap across the eventual 21 million Bitcoin supply. That does not mean Bitcoin is guaranteed to go there. It does not mean ARK is definitely right. But it does show you the scale of the institutional thesis. This is not a call for Bitcoin to go from $78,000 to $90,000. This is a call for Bitcoin to become one of the biggest financial assets in the world. ARK's logic is based on a few major ideas. First, if Bitcoin becomes even a small percentage of global investment portfolios, the inflows could be enormous. One estimate cited in the reporting says that if Bitcoin captures just 2.5% of the roughly $200 trillion global investment portfolio market, that alone could add around $5 trillion to Bitcoin's market value. Second, if Bitcoin continues to eat into gold's role as a store of value, ARK believes the upside could be even larger. The digital gold argument is simple. Gold is heavy, slow, hard to move, expensive to store, and difficult to verify at scale, while Bitcoin is scarce, global, liquid, and transferable 24/7. That is the argument the bulls are making. But here is the important balance. ARK's forecast is extremely bullish, and it depends on institutions continuing to buy, ETFs continuing to absorb supply, companies continuing to hold Bitcoin on balance sheets, and governments or sovereign entities eventually treating Bitcoin as a reserve asset. If any of those assumptions slow down, the $16 trillion target becomes much harder. This is why today's $78,000 price level matters. The long-term thesis might be huge, but the short-term market still has to prove it can break 80,000, hold momentum, and avoid getting knocked back by macro pressure, regulation, or sudden liquidity shocks. And that takes us to South Korea, where Bithumb has just scored a major legal win. A South Korean court has lifted a 6-month partial business suspension that had been imposed on the exchange after regulators accused it of anti-money laundering failures. The suspension was linked to a March action from South Korea's Financial Intelligence Unit, which reportedly included a $24.6 million fine and allegations involving customer identity verification and transaction blocking failures. The key development now is that the court has granted a stay of execution, meaning Bithumb avoids the immediate impact of that 6-month suspension while the broader legal process continues. This matters because South Korea is one of the most important crypto markets in the world. Korean retail traders can move markets. Korean exchanges can drive altcoin volume. And when regulators in South Korea go after exchanges, it sends a message across the entire region. Bithumb getting relief from the court does not mean the exchange is completely cleared. It does not mean the regulatory issue disappears. But it does show that exchanges are prepared to fight back, and courts may not always allow regulators to impose the harshest penalties without challenge. For the wider crypto market, this is another example of the industry entering a more mature legal phase. In the early days, crypto regulation often looked like sudden bans, vague warnings, or emergency enforcement actions. Now we are seeing something more complex. Fines, suspensions, appeals, court stays, compliance battles, and exchanges trying to prove that they can operate inside traditional financial rules. That is messy, but it is also part of the institutionalization of crypto. If Bitcoin is going to become a multi-trillion-dollar asset class, then exchanges, custodians, ETF issuers, treasury firms, and regulators all become part of the same story. And that brings us to Strategy, the company formerly known as MicroStrategy, because Michael Saylor's Bitcoin machine is still one of the biggest institutional stories in the entire market. Strategy has kept the dividend on its STRC perpetual preferred stock at 11.5% for May. That is the third consecutive month at that level, with STRC's April volume-weighted average price reported at $99.76, close to its $100 par value. The idea is that STRC works almost like a high-yield savings-style instrument linked to Strategy's broader capital structure, giving investors monthly cash distributions while the company continues to operate as one of the largest Bitcoin treasury vehicles in the market. The bigger headline, though, is that Strategy's common stock closed April at $165, up 33% for the month. That was its first positive monthly performance in 9 months, ending a brutal 8-month losing streak. Bitcoin itself rose around 12% in April, which helped restore confidence in Bitcoin-linked equities. This is important because Strategy is no longer just seen as a software company with Bitcoin on the balance sheet. It is now viewed by many investors as a leveraged Bitcoin treasury company, a capital markets vehicle, and almost a proxy for institutional Bitcoin exposure. But there is risk here as well. When Bitcoin rises, Strategy can outperform. When Bitcoin falls, Strategy can suffer badly. That is the trade-off. The STRC dividend being held at 11.5% shows that Strategy is trying to create more structured, income-like products around its Bitcoin strategy. But investors still need to understand what they are buying. This is not the same as holding cash in a bank. It is not the same as owning Bitcoin directly in cold storage. It sits somewhere in between traditional finance and Bitcoin leverage, which is exactly why Wall Street is paying attention. So when you tie all 4 of today's stories together, the message is actually very clear. Bitcoin reclaiming $78,000 is the short-term price signal. ARK's $16 trillion Bitcoin forecast is the long-term institutional bull case. Bithumb's legal win is the regulatory signal that crypto exchanges are now fighting inside the court system rather than operating outside the rules. And Strategy's preferred stock dividend shows how Bitcoin exposure is being repackaged into more traditional financial products. That is the real story today. Crypto is still volatile. Bitcoin can still reject below $80,000. altcoins can still lag. Regulations can still hit exchanges hard. And bullish forecasts can still be wrong. But the direction of travel is clear. Bitcoin is no longer just a retail speculation story. It is becoming an institutional allocation story, a treasury management story, a legal and regulatory story, and a capital markets story all at once. For listeners, the key level to watch next is $80,000 on Bitcoin. If Bitcoin breaks through that level with strong volume, the market will start talking about momentum again. If it fails and drops back towards $76,000, then traders will call this another range rejection. But zoom out, and the bigger question is not whether Bitcoin moves $2,000 higher or lower today. The bigger question is whether the institutional bid keeps growing over the next 4 years. Because if ARK is even partly right, the Bitcoin conversation by 2030 could look completely different from the one we are having today. As always, this is not financial advice. Crypto is risky, Bitcoin is volatile, and even the strongest narratives can break when liquidity dries up. But today's roundup shows exactly why the market is still paying attention. Bitcoin is holding the high 70,000s. Institutions are still building the long-term case. Exchanges are battling regulators, and strategy is proving that Bitcoin-linked finance is becoming more sophisticated by the month. And we've got this week's XRP giveaway winners to announce. A massive congratulations to JP, who wins 10 XRP, and also to Chris Hodgkins, Moorhead, Andre Lengel, and Ricky73, who each win 5 XRP. If that's you, make sure you get in touch through the proper channel with your XRP wallet address. And if your wallet or exchange requires a destination tag or memo, please include that as well. That is completely normal for XRP transfers on many exchanges, and it helps make sure the payment goes to the right account. Congratulations again to all 5 winners, and thank you to everyone supporting the show, using the links, commenting, following, and helping Crypto News Today keep growing. Drop your thoughts in the comments. Let me know whether you think Bitcoin breaks $80,000 next or gets rejected again. Smash like, follow, and we will see you at the top.